HOLX is a small cap healthcare stock, and it's unique because it focuses solely on serving the healthcare needs of women. At this point in time, we own about 70,000 worth of HOLX stock, and I'm going to suggest that we sell all of those shares. The four business units that HOLX focuses on are breast health, surgical, skeletal, and diagnostics. And the bad news is the company has missed quarterly earnings for the past 4 quarters. And one of the big reasons for this is due to the profitability of each segment. The breast health segment and the diagnostic segments are very profitable, but the surgical and skeletal both saw decreases in year-over-year earnings. There's also some problems if we look into the two most profitable segments, breast health and diagnostics. In breast health, they saw about a 50% increase in their 3D mammography machine. This is a great machine, the best technology available. It's been proven to be effective. But the problem is that although they're seeing a big increase in sales in the 3D system, they didn't expect to see such a decrease in sales of their 2D system, which is the older technology. So it's kind of making the profits of the 3D, it's not having as big of an impact as they want. It's kind of the same story when you look at the diagnostic segment. They recently acquired GenProbe, which is a molecular diagnostics company, and this really increased their earnings, but the earnings were neutralized because they're seeing lower than average ThinPrep sales, and ThinPrep is another testing product. But again, they didn't expect this, and it's causing them to not see the profits they would like to see in that segment. So going forward, I'm a little skeptical about the options that HOLX has to get itself out of this slump. One thing that they could do, and something that the CEO has talked a little bit about, is have another big merger and acquisition deal, M&A deal. And the reason I think this is a really bad idea is because they already have $4 million debt on their balance sheet, and adding more debt, they already have more debt than all of the other companies in their area, and I just think taking on another M&A deal would only increase their riskiness. Management hasn't proven that they have a business, that their business can create these profits to pay off these debts. So again, I don't think this is a good option for them. The next option they have is divestitures, and this would be a good idea if they could get a good price. But the market has kind of shown that companies in similar areas are trying to divest out of some of their non-profitable business lines, and they're having to decrease the prices by 20 to 30% just to get investors to look at the project. So again, I don't think that's a good option for them either. So overall, the original thesis was good, and there weren't many problems in the thesis, but throughout the year that we've owned the stock, a lot of problems that have come up that were unforeseeable. And for that reason, they've missed earnings for 4 quarters in a row. At some point, you just have to, throw your hands up and say, it's not going to happen. They're not able to generate profits, and it's unlikely that they will. And I think that's the case for HOLX. So for that reason, again, I think we need to sell this stock and get out while we can.